Hello everyone, I hope you are doing well. Welcome to this introduction class of the ACCA paper Taxation. And we are going to discuss about the ACCA UK taxation paper, and this thing is important for us at time of booking our exam. We need to select the ACCA UK variant at time of booking our exam. Those students who would be taking TX exam in June 23, September 23, December 23 and March 24 exam session, Finance Act 2022 is relevant for those students. So basically, taxation paper is based on Finance Act, and the previous Finance Act was 2021 and it was applicable till March 23 exam session. From June 23, September 23, December 23 and March 24, for these four exam sessions, Finance Act 2022 is relevant. If you would be using any study text or exam practice kit, then on the title you would be finding this thing Finance Act 2022. So that study text and exam practice kit is relevant for you. Before moving on, let me introduce myself. My name is Ziya Rana and I'm ACCA member. I'm in teaching profession since last 9 years and my core areas are taxation, advanced taxation and the financial reporting. I worked for 4 years at KPMG in taxation department. So that's all about myself. What we are going to discuss in this introduction class of taxation paper, I would be guiding you the paper format, the syllabus areas, the pattern of examinability, and how we shall be covering this course. I would be guiding you all these things in this introduction class. Taxation paper is divided into 3 sections. Section A for 30 marks, B for 30 marks, and section C for 40 marks. In section A, there are objective test questions. Same in section B, these are objective test questions, and in section C, constructive response questions are there. Section A questions can be asked from any area of the syllabus. Section B questions areas are specified. There will be 3 scenarios, one for capital gain taxes, another for inheritance taxes, and third for value added tax. The good thing is for section B, we know that from which areas the question will be asked. There will be 3 scenarios, one for capital gain tax, and this scenario would be containing 5 questions of worth 2 marks each. So 10 marks for capital gain taxes, 10 marks for inheritance tax, and 10 marks for value added tax. When it comes to the discussion of section C, so the constructive response questions are there, and 3 questions will be asked. One for tax planning for 10 marks, second for income taxes for 15 marks, and third for corporation taxes for 15 marks. So this is how a 100-mark paper is examined. And obviously, as you know, the 50 marks are the passing marks. Let me guide you another thing. As I have marked that section B areas are defined. Section C, there would be 3 questions and 2 areas are specified. So basically, in section C, 1 question is asked for taxation of individual person, means income taxes. I repeat, in section C, there will be a question for taxation of individual person, like if you and I are paying taxes. So that means these are the taxes of individual person. It means income tax. Whenever a company is paying any tax, so when the company is paying tax, so that means corporation tax. The third question in section C is with respect to the tax planning. That's not from any specific part, any specific chapter. It's not like that. Tax planning question can be asked from any area of the syllabus. So you can see any area of the syllabus is examined in section A as well as the 10-mark question in section C. For rest of the 60 marks, we know that 60 marks will be examined from these areas. Furthermore, as I have guided you on the very first slide, that Finance Act 2022 is relevant for all those students who would be taking TX exam, TX paper in June 23, September 23, December 23, and March 24. So the Finance Act 2022 is relevant. What exactly do you mean by this fiscal year or the tax year? Every country has its own tax system and has its own defined dates for tax year. For example, Pakistani tax system operates from 1st July to 30th June next year. Same goes with the UK. UK fiscal year or tax year starts from 6 April and ends on 5th April next year. And under the Finance Act 2022, if we further talk about fiscal year thing, under this Finance Act, fiscal year 22-23 is relevant, which starts from 6 April 22 and will end on 5th April 23. It means for our practice purposes, for our question practice purposes, this fiscal year 22-23 is relevant and we shall be performing all of the calculation according to these dates. And this fiscal year is relevant to those students who are taking this paper in the exam in the period from June 23 till March 24. So I repeat, we have talked about two things, the Finance Act 2022, and thereafter the further thing is the fiscal year 22-23 is relevant for those students, and the relevant dates for the fiscal year 22-23 starts from 6 April 22 and ends on 5th April 23. Be aware of these dates because we shall be performing all of the calculation according to these dates. Now, UK tax governing body name is HMRC. Her Majesty, Revenue and Customs. Tax bodies are also termed as revenue bodies. Tax bodies are also termed as revenue bodies because being a taxpayer, if you and I and other companies, other individual person, all of the taxpayers are paying taxes. The tax paid by the taxpayer is considered as revenue for the government because government have to spend money on infrastructures, on roads, on providing hospital facilities, providing educational facilities. So to meet these expenses, how the government meet these expenses? By our taxes. So the taxpayers who are paying taxes, that tax is actually considered as the revenue for the government. For tax governing body, we can use the word revenue body, revenue authority. So UK tax revenue authority name, UK tax governing body name is HMRC, Her Majesty Revenue and Customs. There are certain responsibilities associated with the tax governing body of any country. These responsibilities are not merely pertaining to HMRC. These are the general points and these are the responsibilities for any tax governing body for any country. So here we have few points in front of us. There are a number of other responsibilities of any tax governing body, but for the sake of reference, but for the sake of discussion point, we have like few points in front of us. For example, tax collection, tax payment is the main responsibility of a tax governing body. In different countries, a person gets money from government in respect of their children. If the person is like having a low level income, government will support and paying them money. So paying child benefits is the responsibility of HMRC, conducting tax audits, and detecting any fraud. Such kind of things are also the responsibilities of a tax governing body. Let's say in previous year you paid the amount of tax, let's say 10,000 pounds, but now in this year you are not paying any tax liability. So how the tax liability is reduced? Tax authority may start a tax audit for you for a taxpayer. Maintaining tax records of the taxpayer is other responsibility of HMRC. Furthermore, identifying possible areas of tax generation. What exactly do you mean by this thing? As I told you, our tax is a revenue for the government. It means government always try to increase its revenue, and they always try to identify the new possible areas where from they can get the tax from the taxpayers. So identifying possible areas of tax generation is another responsibility of the tax governing body. And last 2 points, let me guide you on this. Let's say being a taxpayer, if you are not clear with any taxation law, if you are unaware of any taxation law, if you are not getting the meaning of any tax law, in this case, you would be writing to the tax governing body, and it's the responsibility of the tax governing body to respond in that case. To make you clear, to answer your queries with respect to taxation laws and rules, it's the responsibility of the revenue body to address your queries to make you clear with respect to the question raised by the taxpayer. And furthermore, also in the last point, also to educate and to inform the public about their tax paying duties is also another responsibility or the duty of a tax governing body. And by the way, as we are studying the UK taxes, we need to keep this thing in mind that UK tax governing body name is HMRC, Her Majesty Revenue and Customs. 2 terms are here, and in section A, this question can be asked for 2 marks. Examiner will ask which of the following correctly describe the tax evasion and tax avoidance. Then you need to select the correct answer. What is tax avoidance? What is tax evasion? By doing any of these 2 things, overall tax liability will go down. Tax avoidance and tax evasion both can be used for reducing the tax liabilities, but one way is legal way and the other one is illegal way. Tax evasion means you are evading tax. You are hiding tax. If you are trying to reduce your tax liabilities by illegal means, it means you are involved in tax evasion, and due to which penalties and fines are applicable upon detection by HMRC. If they found you are involved in any tax evasion thing, they can fine you, they can impose penalties on you. You means the taxpayers. The other way to reduce the tax liability is the tax avoidance, or also termed as tax planning. Minimizing tax liability by applying the favorable options. Let's say there are 3 options are available for calculating tax liability. Just assume. Let's say there are 3 options are available for calculating any tax liability. Let's say I am opting option 2 because for myself, option 2 would be giving me the reduced liability as compared to the option 1 and option 3. Let's say another person selected option 3 because option 3 was favorable for that person. And let's say you have selected the option 1 because you compared all of these 3 options and you found option 1 favorable for you. It means whenever a taxpayer is identifying the loopholes in the taxation laws and select the favorable option for themselves, it means they are planning their taxes. They are trying to avoid the taxation. It means they are under the boundaries of the taxation laws, they are opting those options which are giving a reduced liability for themselves. So if any taxpayer is doing this thing, so that is termed as tax avoidance or tax planning, and it's not an illegal activity. It's not an illegal activity, and which does not entail misleading to HMRC. Because what we have done is that we have identified the loopholes in the taxation laws and opted that option which is in favor of myself. So if any taxpayer doing like this, it means taxpayers are basically planning their taxes. They are avoiding the tax. They are minimizing tax liability by applying the favorable options available in the taxation laws. So what we have discussed till now, first of all, we talked about the Finance Act and I have told you that while using any study text, while using any practice exam kit, FA 2022 should be mentioned there. And this Finance Act is relevant for those students who are taking TX paper in any of these 4 exam sessions. Thereafter, we talked about taxation paper format. Section A, B, and C are asked, and 60 marks areas are in fact are defined that 15 mark question will be asked for income taxes, 15 mark question will be asked for corporation taxes, 10 marks for CDT, 10 marks for IST, 10 marks for value added tax. And for remaining 40 marks like tax planning and the section A type questions, we are not aware that which kind of questions will be asked. Then we discuss in the Finance Act 2022, fiscal year 22-23 is relevant, and the relevant dates are 6 April 22 and 5th April 23. Then we also discuss the tax evasion and tax avoidance, and I have guided you in section 8 of question. These terms can be asked for 2 marks question. This thing is very important to understand now. And over here, we are going to divide our syllabus areas. There are mainly 5 syllabus areas: the income taxes, the corporation taxes, the capital gain taxes, inheritance tax, and the last one is value added tax. These are the 5 main areas in the taxation, and we have divided these areas according to their tax basis. First thing is income based tax, where the tax is paid based on the earned income, so that is income based tax. Second category is capital based tax, where the tax is paid based on non-current asset, means here we need to pay the tax due to any non-current asset, so such taxes are termed as capital based taxes. And where any tax is paid based on the consumption of goods or services, so that is basically goods or service tax. And the one category and the only category is the value added tax. Let me guide you. An individual person earns income and for surely pays tax on it, so that is termed as income tax. And income tax is a kind of a direct tax, because here the tax is directly involved based on the earned income. But why we are using income tax? Whenever there is taxation of individual person, we always use this word income tax. A company earns income or profit and pays tax on it. Here, the corporation tax is used due to the taxation of the company. The person is paying taxes, that is income tax. The company, being artificial person, is paying any taxes, that is corporation tax. And corporation tax is also a kind of a direct tax, because here the taxes are applicable based on the earned income of the company. If a person is disposing any asset, transferring asset, exchanging any asset, and we are talking about the non-current assets. Capital based tax means any tax which is based on the capital assets, any tax which is based on the non-current asset. So such taxes are termed as capital based taxes, and it has further 2 categories: the capital gain tax, CGT, and the other one is inheritance tax, IHT. If a person is selling any asset, transferring any asset, gifting any asset, or exchanging any non-current asset, then the capital gains tax is applicable, and it's also a kind of a direct tax, because On disposing the asset, if there are gains, on such gains, capital gain tax is applicable. So that is the reason CAPCGT is a direct tax. But IST is applicable on the transfer of non-current asset. I'm not using the word exchange. I'm not using the word sale. I'm not using the word gift. I'm using the term transfer. Inheritance tax is applicable on the transfer of non-current asset at time of person's death. When a person is transferring any asset in life, capital gain taxes are applicable. But when the non-current assets are transferred at time of death, so inheritance tax is applicable, and IST is neither kind of tax. It's not a direct tax. It's not the indirect tax. It's neither kind of tax. Why it's neither kind of tax? Why inheritance tax is neither kind of tax? Because it is not applicable due to the earned income. When we pay tax based on the earned income, that is direct tax. For example, for individual person income tax, for a company corporation tax, they earn income and pays tax. So income based tax is a direct tax. In the capital based tax, capital gain tax is a direct tax because it is directly applicable on the gains on the disposal of assets. But over here, a person is not getting income, a person is not getting any gain. Simply the non-current assets are transferred at time of person's death. So that is the reason inheritance tax is neither kind of tax. It's not a direct tax and not an indirect tax. The last one, goods or services tax. It is levied upon the consumption of goods or services. It is known as value added tax, and it's a kind of an indirect tax because it is not directly applicable on the consumers. Basically, it transfers from manufacturer to wholesaler, then it transfers from wholesaler to retailer, and then finally it transfers from retailers to end consumers. So basically, value added tax is mainly there for the end consumers. And if you want to avoid the value added tax, you need to stop consuming the goods or services. So that's the only way to avoid the value added tax. Whenever you would be consuming any goods or services, you are required to pay the value added tax. In some countries, it is also termed as sales tax, also termed as GST, general sales tax. And in UK course, it is termed as value added tax. These 5 areas are the major areas and the syllabus chapters. And let me also mark this thing. Income tax is asked in section C for 15 marks, if you remember. Corporation tax is asked in section C for 15 marks. Capital gains tax is asked in section B for 10 marks. Inheritance tax is asked in section B for 10 marks. And also this VAT is examined in section B for 10 marks. These are the main areas which we shall be studying in the taxation course: income taxes, corporation taxes, capital gain, inheritance tax, and VAT. How we shall be covering, what would be the sequence? Don't worry, I am going to guide you the sequence and the pattern of covering all of these things. Types of tax rates. There are mainly 3 types of tax rates: progressive tax rates, proportional tax rates, and regressive tax rates. To understand this thing, let's say we have 2 columns in each separate heading, the income and tax. Let's say you are getting an income of 1000 and you are paying tax of 200 on 1000. Your income is increased to 2000. It means your income has increased with a proportion of 2. On this 2000, you are now paying a tax of 500. When you check, your tax has been increased in a higher proportion as compared to income. So when the tax is increasing in a higher proportion as compared to income, so such tax rates are termed as progressive tax rates. Under the types of tax rate, we have discussed the thing of progressive tax rates. Let's say your income level was 1000. At that time you were paying tax of 200. Your income increased to 2000, but your tax has increased to 500. On this amount you are now paying 500. Then you compared that your income has increased in a proportion of 2, but your tax has been increased with a higher proportion as compared to income. So such tax rates are termed as progressive tax rates. Tax increasing in a higher proportion as compared to income, so such tax rates are termed as progressive tax rates. Now let's talk about the second, proportional tax rates. Your income was 1000 and at that time you were paying, let's say, tax of 200. Your income has now increased with a proportion of 2. You can see on this 2000 you are now paying the tax of 400. It means tax also increased in a same proportion as the income increased. When the tax is increasing in a same proportion as compared to income, such tax rates when applied, those tax rates are termed as proportional tax rates because income and tax both are increasing in the same proportion. Let's talk about the third one. When you were getting 1000, you were paying tax of 200. Your income has now increased with a proportion of 2. On this 2000 you are only paying tax of 300. When you check this thing, and the conclusion point is that your income has increased with a proportion of 2, but your tax increased but with a lower proportion as compared to the income. So when such tax rates are applied, these are termed as regressive tax rates. This point is mentioned here, tax increasing in a lower proportion as compared to income. Tax is increasing in a lower proportion as compared to income. So when such tax rates are applied, those tax rates are regressive tax rates, also termed as inverse of progressive tax rates. Regressive tax rates are sometimes also termed as inverse of progressive tax rates. Is the vice versa of progressive tax rates. Hopefully all of the things are clear till now. Here is a sequence of the topics and the chapters which we are going to cover in this taxation course. Currently, we are discussing this thing, Introduction to TX and Basic Calculations, and about basic calculation we are going to discuss after a few minutes after the discussion of this index. Thereafter, we'll be starting the area of the income taxes. And from serial number 2 till serial number 12, income taxes, all of these are pertaining to income taxes. Income taxes means the taxation of individual person. If you and I, we are paying taxes, when an individual person paying tax, that is termed as income tax. And income tax, all of these like property income, employment, interest, dividend, tapering and transfer of personal allowance, child benefit, family income, income sheet, pensions, residency concept, trading income or business income, partnership profits, losses of individuals and administration of tax. All of these are covered in the heading of income taxes. Thereafter, the capital gains for companies, capital gains for individuals. These two are the subtopics in the capital gains. Thereafter, the third area of the corporation tax, then value added tax, then inheritance tax. Tax planning is not a chapter in the course. Tax planning questions basically are based on the discussion and the entire knowledge which we have gained in all of the previous chapters. Based on the knowledge gained in above 17 chapters, then we will be able to attempt these tax planning question, and this question is asked in section C for 10 marks. As I told you, this syllabus A is mainly divided into 5 areas. So you can see number 1 is income tax, number 2 is capital gains, number 3 corporation, number 4 value added tax, number 5 inheritance tax. I have also guided you this thing on the previous slide. So the taxation course is mainly divided into 5 areas. Income tax is basically income-based tax, corporation tax is income-based tax, capital gains is capital-based tax, inheritance tax is capital-based tax, and value-added tax is like on the consumption of goods or services. My suggestion is to follow all of these things in this sequence, and please do not change your sequence. All of the lecture would be uploaded in the same sequence on the portal. From now onwards, our area which we are going to start now is about income taxes. Income tax means the taxation of individual person. And for the taxation of individual person, which is based on the fiscal year, and our relevant fiscal year is 22-23, starts from 6 April 22, ends on 6 April 23. It means whenever you are required to calculate the taxation of individual person, means income taxes, please do not forget these dates. You are required to follow these dates. You are required to perform all of the calculation based on this fiscal year according to these dates. For the taxation of individual person, first thing to check is the sources of income. Apply the scenario on yourself, then it would be easy to understand. Think, in your whole life, maximum you would be having 6 sources of income. Property income, also termed as rental income, any income which is earned by letting out the land and building the properties to tenants. If you are doing any job, you are getting money from your employer, so that is employment income. If you are engaged in any business and getting income, that is trading income. If you have invested somewhere in the loan notes or the debentures, or you have like put your money in a bank's fixed account, then you will be receiving interest from bank, from loan notes, from the debentures. That source of income is termed as interest income or savings income. If you have invested somewhere in shares, if you have purchased the shares of any company and yearly you are now getting the dividend from the company, then it would be considered as dividend income for you being an individual person. And if you are now old age sitting at your home, still if you are getting any amount from the government, from your employer, then that would be considered as pension income. Apart from these 6, no other source of income is there for individual person. One thing for surely would be bothering you. Let's say if an individual person is disposing an asset, if there are gains, so they are gains, not the income. Whenever there is gains on the disposal of the non-current asset, another head of tax is there for the taxation, that is capital gain tax. That has no link with the income taxes. For income tax purposes, we need to consider the sources of income, and mainly and broadly there are 6 sources of income. And we do calculate each source of income separately and put in this income sheet. Property income is a separate topic. Employment income is a separate chapter. Trading income is a separate discussion. Interest income, all these are calculated separately and is reported to the sources of income or the income sheet of the person. Thereafter, total income is calculated. And on this total income, from this total income, we can deduct the amount of personal allowance. And this personal allowance amount is fixed for the fiscal year 22-23, that is 12570 pounds. Personal allowance is basically, you can understand this thing as it is treated as a tax-free income. To this extent, if you are getting any income, there is no taxation. From the total income, deduct the 12570 as personal allowance. And finally, the taxable income is calculated, And this taxable income is subject to the taxation to calculate the income tax liability. I repeat, how we have to deal with the income taxes. For the taxation of individual person, we should know about the sources of income. It's not necessary in any question all of 6 sources are available. It's not like that. There could be any one single source, there could be any two sources of income, there could be all 6 sources of income, there could be any 4 sources of income. It's not necessary to have all of these 6 sources of income for each individual person. Let's say if I'm only doing job, so I'm only having one source of income, that is employment income. If you are renting out your properties and also doing a business, then you are having 2 sources of income. Let's say another person have invested somewhere in shares and also invested in loan notes, that person would be having 2 sources of income. So sources of income thing is vary from question to question, scenario to scenario. And what we are required to do is that we need to calculate the each source of income separately to place that amount in the sources of income in the income sheet. Then from the total income, deduct the personal allowance. And from the after deducting this personal allowance, taxable income is calculated. Furthermore, on this taxable income, we shall be applying the income tax rates. On this taxable income, we shall be applying the income tax rates. I repeat, on the taxable income, we are required to apply the tax rate to get the final amount, that is income tax liability. You can understand this pattern now: adding sources of income, getting total income, deducting personal allowance, then taxable income. On this taxable income, applying tax rates to find the income tax liability. So this is how all it operates for the taxation of individual person. And in UK, if we talk about income tax rates, 3 rates are there: 20%, 40%, 45%. 20% is a basic rate, 40% is the high rate, 45% is an additional rate. If a person is paying tax at 20%, the status of the person will be basically taxpayer. If you are paying tax in UK at 40%, your status will be high rate taxpayer. If a person is paying tax at 45%, so the status of the person will be an additional rate taxpayer. But these rates are applied in the form of bands. If a person's taxable income, I'm talking about this taxable income, is in between these band limits, then 20% is applicable. If additional taxable income is falling in these band limits, to this extent, tax rate will be 40%. And if the taxable income is more than 150,000, then any amount which is in excess of 150,000, that amount, that taxable income is subject to tax at 45%. Don't worry, we are going to perform 6 to 7 different examples to know about this thing, that how exactly we can calculate the tax liabilities and what is the pattern, what is the sequence, what is a way to apply the band limits and to apply the tax rates. Here we have example 1, and the requirement of this question is to calculate the taxable income. Total income is given as £30,000 and you are required to calculate the taxable income. From the total income, 12570 is deducted as personal allowance, resulting the 17430 is calculated as taxable income. Example 2, total income is given as 10,000. Requirement again to calculate the taxable income. You can see that total income is 10,000, and if we deduct the personal allowance amount of 12570, the resulting amount is negative 2570. It means now we are receiving tax from government, because in this case, personal allowance means a sort of relief is more than the total income, and taxable income is created as a negative figure. This can never ever be possible. In this case, if the total income is less than the amount of personal allowance, we have to restrict the amount of personal allowance. So the taxable income is calculated as nil. And when we are using a reduced amount of personal allowance, we shall be writing restricted amount of personal allowance. Personal allowance can reduce your taxable income to nil, but cannot be create a negative figure. Any relief, any sort of relief, any allowance, any personal allowance, anything in the taxation would lead towards the positive income to nil, but cannot be create a negative figure. Let me also write a note over here. Personal allowance can reduce taxable income to nil, but cannot create a negative figure. In example 3, you can see a requirement is somehow changed now. In the first two examples, we just calculated taxable income. And we learned this thing that personal allowance can reduce the taxable income to nil, but cannot create a negative figure. In example 3, total income is given as 35,000 and requirement is to calculate the income tax liability. 35,000 is your total income. Deducting the personal allowance of 12570, taxable income is calculated as 22430. If you remember, first band limit, which starts from 1 pound to 37,700, and our taxable income is less than the basic rate band limit and also less than the second band limit of 150,000. This total amount of 22430 is in between the first band limit. It means 22430 is gonna tax at the basic rate of 20%. 4486 is calculated as the income tax liability. Don't worry, we have further examples to understand, to practice this thing. We cannot do like this, that we cannot directly use any tax rate. We need to follow the band limits in each case, in each scenario. How we shall be following the band limits? Don't worry, we have further examples to practice this thing. In example 4, total income is 57850. Requirement is to calculate the income tax liability. Let me write the total income 57850, deducting the personal allowance of 12570. Taxable income is calculated as 45280. This amount is more than the first band limit of 37,700, but less than the second band limit of 150,000 pounds. In this case, you cannot do like this, that this 45280 is more than 37,700, directly applying that 40% tax rate. No, if you are doing like this, you are performing wrong calculations. Let me guide you over this. For the first 37,700, from this amount to this extent, 37,700 will be taxed at basic rate of 20%. Tax liability is calculated as 7540. Thereafter, how much amount is exceeding from 37,701 to 150,000, which amount is here from 45,280, the initial amount of 37,700. So the difference of 7580 is falling in this band limit, in second band limit. It means tax rate is 40%. 7580 into 40% is giving you an amount of 3032. By adding these two amounts, the total income tax liability is 10572. For further confirmation purposes, the sum of these two values should be equal to your total taxable income. So this is how we need to follow the tax band limits. Another example, over here, the taxable income of 112,000 is directly given. It's not the total income. Basically, the taxable income is directly given in question, and requirement is to calculate the tax liability. Before the calculation of tax liability, you can see that this taxable income is more than the basic rate band limit of 37,700 pounds, but it's less than the second band limit of 150,000. How to apply, how to calculate the tax liabilities? From this amount of 112,000, from this taxable income, to the extent of 37,700, tax rate is applied at 20%, 7540 is calculated. Then from 37701 to the extent of the second band limit 150,000, how much amount is left? You can take the difference of these two values. From 112,000, we have deducted an amount of 37,000. We have taxed an amount of 37,700. Difference is 74,300. This amount is subject to tax at 40%. 29720 is calculated. The sum of these two is the income tax liability 37260. It's my request to please perform to check calculations at your own, and please make me correct if I'm wrong, and also do correct if I have calculated any amount incorrectly. The sum of these two amounts should be equal to the total taxable income of 112,000. Another example for the same concept, taxable income. Again, the taxable income of 180,000 is given in this scenario. Requirement is to calculate the tax liability. In this case, this taxable income is more than the first band limit and also more than the second band limit of 150,000. For the initial 37,700 from the total taxable income, the first 37,700 is taxed at basic rate 7540 is calculated. How much amount is falling in the second band limit? The difference of these two is 112,300 into 40%, 44920 is calculated. In third and in the final step, now do take the actual taxable income, deduct the 150,000 range. The additional amount is 30,000 into the additional amount is subject to tax at additional rate of 45%. 13,500 is calculated. Income tax liability is the sum of 65960, the sum of these three amounts. If you want to confirm whether you performed correctly or not, the sum of these three values should be equal to 180,000. Hopefully now you are getting the idea that how to perform, how to use the band limits, how to apply the tax rates. Example 7 is same as the previous one. The taxable income is given as 165,000. And this taxable income is more than the basic rate band limit of 37,700 and also more than the second band limit of 150,000. It's my request to please stop video here and try to attempt this last example at your own first, and then you may compare your answer with my calculations. Please stop video for 1 to 2 minutes. And after attempting this example at your own, then you may compare both the answers. All right. From the taxable income of 165,000, from this amount, first 37,700 is taxed at 20%, resultingly 7540 is calculated. The differential of 150,000, if we deduct 37,700, this amount, the differential amount of 112,300 is subject to tax at 40%. 44920 is calculated, and finally, in the last step, to take the taxable income 165,000, of which 150,000 has already taxed. How we can check this thing? The sum of the above two values should be equal to 150,000. This excess amount of 15,000 is taxed at 45%. 6750 is calculated. And the total tax liability in this scenario is 59210. And the last thing to check to confirm is the sum of these three should be equal to your total taxable income. From next chapter, we shall be continuing all of the lectures according to the sequence which is given to you in the form of index. We shall be following all of the lectures in that sequence.